Hey guys, welcome to a new video of the Smart Money course, and this video is called Risk Management. So before we begin, I just want to say that Forex trading contains risk of real money. So this is a disclaimer, that's pretty much it. Now let's begin. So what is risk management in Forex and why is it so important? Basically, if you're trading, say there are three different type of traders right here, alright, and every one of them is trading differently, okay? So, or let's say two, okay, no, let's say three, that's good. So what you are doing different to any other trader is, what I am doing different to any other trader is, my risk ratio, my risk to reward ratio is always greater than 1:5 or 1:5, greater or equals to 1:5. Alright, so basically this. So if you're a trader who's always, when I first started, I was always doing 1:1 or even less, which is so bad, which is kind of horrible really. So that was back in like two years ago, so that's super bad. So now I'm doing 1:5, right? And some people are doing even worse, which is say 2:1. So now think about it. If you have more risk than reward, your accuracy of trading has to be really good, at least 80 to 90%, right? 90% maybe, at least, and still you're gonna have it really difficult to make money. However, if it's 1:1, it's pretty much the same thing. You're gonna make a little more money with this accuracy, but it's still not enough to be in this market in the long term, because no strategy in the world, to be very honest, if anyone's selling it, it's basically a scam, because most of the time now no strategy can get you consistent 80 to 90%. And the reason of this is because it's very simple to understand. Think about it. Why can't a strategy have 80 to 90% success? Because the market moves in cycles in different ways. Alright, the market, the way it moves during November, December, January won't move the same during June or July, because the end of the year is different, the beginning of the year is different, the middle of the year is different. Every time of the year is different for the markets. Why? Because these financial markets move based on financial news and how the world is going on, etc. Such as this COVID pandemic completely changed the market, like completely changed the historic market. So many things happened. The Australian fire that happened, and that changed completely how the dollar and the Australian dollar worked. So you need to understand why it's not physically possible, at least in my eyes, in my opinion, it's not possible to have this much accuracy consistently every time you are going to trade. So why is risk management important? Let's say me, I'm doing 1:5, right? So if I'm doing 1:5 with just an accuracy of around 40 to 50%, I can make really good money. Think about it. When I'm risking, say, $100 per trade, alright, $100 per trade risk, alright, $100 per trade risk. I'm doing over here, down here, and down here, all three, alright, and I take, say, 10 trades a month. This is just an analogy and just an example, alright? Nothing too serious, just to make you understand how and what's happening. 10 trades a month on all three occasions, alright? Now these are three different traders. Now this trader, if say he loses around say two times with this accuracy, alright. So let's say me over here, this, as I said, it's not possible to have this much accuracy, right? It's physically not possible. So let's think about this one, alright? If you have, say, 40% accuracy, or let's go with 50% first. If you have 50%, so I'm just gonna delete this because it's of no use, because I already told you why it's not possible to have 82. Even if you do, it's not worth it. Believe me, it's not worth it. Now let's begin and show you how it's actually working. All right, just a second. Okay, awesome. So yeah, let's keep it down here. Right, okay. So let's say we have 10% accuracy. Now let's go with 20% accuracy. See, 30% accuracy, 40%, 50%, right? Oh, let's do it like this. 50%, alright? Some different. Now these are accuracy, alright? These are accuracy. Now, I'm just gonna show you why risk management works and how it works so deeply awesome, alright? Because honestly, I've stuck in for so long when I wasn't doing good, all because I started Forex with pretty good risk management. The first few months I wasn't good, then I realized risk management is important, and I didn't even know smart money back then, but risk management still helped me. To be very honest, when you're trading, whatever concepts you're trading, risk management is everything in the end. So let's begin and show you how it works. So let's say you, out of 10 trades a month, you have an accuracy of 20%, alright? So that means you're winning 2 out of 10 trades, right? 2 out of 10 trades, right? And that means we are risking 100 per trade, and our reward is 5 times, right? And our reward is 5 times. Over here, same thing, except 3, and over here, same thing, except we have 4 wins, and over here we have 5 wins, right? And the reward is the same all the time. I've gone up to 1:29, 1:30 reward, and even more sometimes, but I'm just trying to show you how 1:5 can make you like huge. You don't even need to get that much, alright? But just an example. So if you're winning just 2 times and losing 8 times, which is basically 8 into 100, right? So that means you lose $800, right? You lose $800. Shit, my bad. To $800, right? And over here you're winning $1,000, right? Close to $1,000. So your overall, even after winning just 2 trades out of 10, your overall profit remains $200. You can see how powerful this is, how powerful the risk management is, and why I recommend you to. I'm gonna show you how to do it. This is just to show you why it's so important. Alright, trying to keep this video as short as possible, so you can imagine what's gonna happen here as well, right? Now we got $200 down here, $200. Yep. Now if you look at this, same thing. You lose 7 out of 10. You have $700 loss. Profit overall equals $300. Sorry, my bad. It should be more, because you got basically around 3 into 500. Just a second. 3 into, I'm so bad at maths. I'm so sorry. Yeah, that's 1500. Yeah. So 1500 minus 700 equals basically what you call it? Damn, I'm so bad at maths. $800. So you can see the difference. You can also imagine what the profit is gonna be down here, right? You're losing only $600 down here. 600. That's pretty much it. Risk management's pretty much it. Like, you gotta understand how the thing about it is mostly psychology to understand that the next trades are gonna make you the profit. You need only 2 or 3 wins per month. You don't need like 10 wins. You don't need to trade every day. And even if you want to, there's a different way for it. I'm gonna show you every way of it. But you get the idea of risk management, what I'm trying to show you. And I'm gonna show you how to do risk management in the next video. Thank you. And please do follow me on Instagram. And if you need any questions, get on me on Telegram, and we'll talk about it.